What's going on, everyone? We hope you had a great and relaxing weekend because you're going to need it once you see the schedule for this week ahead. Not only is this week the largest week of the entire earnings season, as we have powerhouse companies like Google, Microsoft, Meta, Apple, Amazon, and a whole bunch of others set to report, but also news came out over the weekend how Israel actually had their first open attack on Iran, so that was a pretty big development. On top of that, we have some important economic data releases for the week ahead, with some inflation data coming out on Thursday, and then the presidential election next Tuesday. So we have a lot to talk about today. There's a lot of action happening in the stock market and important things to be aware of. So as always, make sure to stick around all the way into the end. Tom will not be with us today. He did have a family-related emergency pop up over the weekend. So hopefully he should be back with us soon, but we still have a lot to cover. So let's get right into today's episode. First things first, this week's earnings season, again, will be extremely important, not only because we have some major companies set to report, but we've also had a pretty explosive earnings season from the past couple of weeks. Last week, Tesla reported earnings, and they actually had their biggest move in 11 years. And this is a company like Tesla. It takes a lot to see this much movement out of a stock like this. But Tesla is not the only stock that has been moving in a big way. Basically, all stocks that have reported earnings this earnings season have been moving in a pretty major way in one direction or another. And this week will be especially important because we are seeing the biggest, baddest companies of the entire market set to report. And it's like quite literally all week long. And what's pretty interesting about this scenario is that the current concentration of the S&P 500 is more lopsided right now than it has been in quite literally 100 years. We could see by looking at this chart, I guess you could say the ratio between the largest stock in the S&P 500 compared to the stock in the 75th percentile of the S&P 500 is at the highest level that it has been at since 1932. And we could see some other historical data on the chart right here. The main thing you need to know is that quite literally the biggest, baddest, strongest companies in the market run the show. And as we look at this data more in depth on Slick charts, we can see that a lot of the major companies that are set to report this week are those stocks that are in, let's say, the top 10 position for the S&P 500. We have companies like Apple, Microsoft, Amazon, Meta, Google, and others set to report this week. So when these stocks move, they will shake up the market quite a bit. And on top of that, it's not like we just have one or two main companies set to report. There's a full lineup for the week. And what was also pretty interesting is that we are seeing kind of a shift in who is truly running the market right now. I saw some pretty interesting news towards the end of last week where Nvidia actually overtook Apple's top spot as the world's most valuable company. So we have a lot of action on the schedule for this week. Let's keep an extra close eye on all of these stocks that are set to report earnings. Like we say constantly, trying to gamble on stocks like, earning stocks before they report it's gambling, right? No one knows not only how the earnings will come out, but more importantly, what the market reaction to those earnings will be. So oftentimes, you could have a much better risk-adjusted opportunity by playing the moves after the fact, just like we saw with Tesla last week, where the stock had a nice move off of earnings, but there was still a ton of opportunity after the fact with much less risk. So definitely keep that as an open consideration for the week ahead. But of course, we have to definitely dive deep into what is going on with this Israel-Iran situation. So it's kind of good, but also kind of bad, as you can imagine. So basically, Israel attacked Iran for the first time ever in an open way like this. The good news is that they limited their attack to military targets and they kind of spared everything else, again, which is good. Also, on top of that, Iran basically just downplayed the attack and said, all right, it wasn't that bad, which is good in the sense that it makes it easier for Iran to de-escalate and kind of let this situation fizzle out a little bit. But at the end of the day, Israel still, rain down missiles in multiple parts in Iran. So that is not good news, but it could have been much worse. So I'd be very curious to see how the oil market reacts to this, because when we look at oil stocks right now, whether it's ExxonMobil or Chevron or quite literally anything else in the oil and energy sector, they have been moving in a way that is a little bit weird. They tried to really run up about a month ago, but it got rejected, and they've just been kind of chopping around ever since. With this news not being as crazy as maybe everyone was expecting it to, if we do see a drop in oil stocks like Chevron, ExxonMobil, and all these other companies, that can kind of tell you that the market isn't really as worried about the situation in the Middle East right now compared to how worried it was just a few weeks ago. On the other hand, if we do see a strong bid with these oil stocks as the market opens up, and if we do see crude oil futures start to run up, that will say a lot in the sense that people are, seeing this event as an escalation. And if that does end up being the case, then there could be some good bullish opportunities that are presented as these weeks go on. I will keep a very close eye on stocks like ExxonMobil, Chevron, OXY, and many others, because they are at points where they are still relatively low in the short term, and if we do see buyers come in here, that can be a good sign for a short-term trade. Again, this is a situation that will have to be assessed as it develops, so we will talk more about this in tomorrow's video. But again, I just want to keep everyone up to date on this situation, as it is very important, and there are a lot of real-world events connected to it. On top of that, besides the situation in the Middle East, besides the crazy earnings lineup for the week ahead, we also have a exciting lineup for this week's economic schedule, in the sense that there's a lot of important data set to release. Some of the most important things will actually release on Thursday, which is where we'll have some core PCE data, or just PCE data come into play. This is important because it shows how inflation is progressing. If we see inflation uptick, that can be one of the worst possible signs for the market, because Jerome Powell made a very bold move at his last interest rate decision, where he's essentially, he cut rates by 50 basis points, which was bold, and by doing that, he's basically taking the gamble that inflation will not make a second push higher. If we did see a second push higher in inflation, that would present some major problems for the economy ahead. But again, let's see if that's even the case first. We will know, we'll get a better glimpse on Thursday, 1 hour before the market opens. So keep that on the schedule. We also have some important unemployment data set to release on Friday before open. And then, like I said, next Tuesday, we have the presidential election. And then the Thursday after that, we have the FOMC interest rate decision. So we have a crazy next couple weeks ahead of us. Here's maybe take a screenshot of this lineup, because there is a lot on the schedule. But looking more at the market right now, the S&P 500 is at an interesting point in the sense that it is still very close to its all-time high in the grand scheme of things. We can see right now it is still around just a little bit over 1% away from its all-time high, which is good. One thing that has seriously been concerning me, though, is that as we look at the price action in the short term for the S&P 500, every time it tries to run up, it gets rejected in a major way, and it is continuously making lower highs, which is not a good thing. As we can see on the chart right here, we had the all-time high on October 17th of right around $586 for SPY. Ever since that point, we are making lower and lower highs, what this ultimately shows is that the selling pressure is becoming more aggressive. It's not yet to the point where it is full panic mode, but it does send an important signal, especially given that we have the election next week. We still have tensions not calm at all in the Middle East, and we have a powerhouse earnings schedule for the week. With that being said, I am skeptical of the market right now because of all of the reasons listed. It is not yet to the point where, it's full panic mode, but there are some worrying signs that are simply worth observing. Given that information, the S&P 500 had a pretty weak close on Friday, and that was pretty concerning. It opened up with a lot of strength and momentum and was starting off in a strong way, but the selling pressure was just too strong to sustain that trend, where we actually saw a decent sell-off pretty early on Friday. Basically, that lasted all the way until after hours. We could see that the market closed right here, but it continued lower as it went on. So I am a little bit skeptical of the S&P 500 right now. Some key levels to keep on watch are this $576.60 area. We can see it right here on the chart. I have the level listed. If we do see a break below that, that would be a bearish sign, considering that was the level that the market actually bounced off of on Thursday. And this also has been a key level in the past as well. If we do get down to that $574.50 area, that is where things would truly start to get scary. Not only is this the recent short-term low, but again, it has been a key support area in the past. Again, this is a level that the market does not want to give up. If we do see a break below that, that will be a serious concern. In the event the market tries to strengthen up again, we do have some resistance right around $581 a share. Again, this is a key point that the market has bounced off of over these past couple of weeks. But for as long as we continuously make lower highs with the S&P 500, that will be a bearish sign. So that is the important analysis for SPY for tomorrow and the rest of the week. Definitely keep those levels on watch. But let's get right into some more stock-specific setups and opportunities. One stock that I'm watching very closely right now is UVXY. UVXY is different in the sense that when there is fear and panic in just straight up bearishness in the market, this ETF has the opportunity to move to the upside in a pretty strong way. It's a leverage ETF that follows volatility. Basically, the more bearish craziness we see in the market, the higher this thing shoots up. As we could see when we had that sell-off back in August of this year, UVXY basically went from $25 a share all the way up to 66. It's a big mover. Right now, we are at the point where it is in the process of building some of that bullish momentum, so it will definitely be on my bullish radar. With that being said, in order for this to be considered a decent opportunity, SPY has to be putting constant pressure on its low of day. If it's not doing that, it's really hard to justify playing a setup like this. We want to see bearishness. We want to see selling pressure. So UVXY is a good setup for that scenario. On another note, I'm also watching CAVA, which is Kava. This stock has been crushing it over the past year, which is awesome to see. It basically went from $30 a share all the way up to $140, and it is up quite a bit. I'm sure many of you have already heard of this company before. The Kava restaurant company, they've been growing quite a bit. Basically, right now they are at the point where they are up so much where they're getting a little bit overextended, and at the same time, they do have some pretty heavy resistance overhead right around this $140 mark. As I look at the stock more in depth, we can see that the stock tried to break through this key area on Friday, but got rejected in a bold way. Once it tested that 140 area, it was not given much room past that, and sellers came in pretty hard and drove this stock down hard on Friday, and pretty consistently too. Because this stock is overextended on a broader time frame, we have short-term bearishness creeping in, and we are seeing a little bit of weakness with the market overall, given that naturally there is some fear with the election happening next week, let alone the risks in the Middle East and in many other aspects right now in a market sense and also in a world sense. It makes sense for some of the strongest, most overextended stocks in the market, like Kava, to have a pullback. This stock is on my bearish radar for the week. The more pressure puts on its low of day, the stronger and better the setup becomes. But I am definitely skeptical and bearish of this stock in the short term. So keep that in mind. And with that being said, let's jump right into today's momentum plays. It's a little bit different with Tom not here today. But with the first one, we have CGC to the upside. This stock is up just under 11%, or it was on Friday at least. For those of you who don't know, this stock is in the marijuana industry. With the election happening so soon, it's not unrealistic for this area of the market to get some more attention than usual. When this stock does get attention, it tends to move in very strong ways, as evidenced by looking at its historical moves, whether it is the one from this March when the stock went from $3 a share all the way up to $15, or even the one from last August when the stock went from $4 a share all the way up to $19. Regardless, CGC is on the bullish radar for tomorrow. Basically, if we see a break below 555, that would be a key level to watch. With the next one, we have PENN. This is also an upside play. Key resistance is at $20 a share, and this stock has been building steady bullish momentum over the past couple of days. And then with the last one, we have Goldman Sachs, but this one is to the downside. On Friday, we saw a lot of weakness in the financial industry, whether it was Goldman Sachs, JP Morgan, Bank of America, Citigroup, or quite literally anything else related to banking and finance. These stocks saw some serious outflows on Friday. There was a lot of weakness here, so if this one breaks below the $510 support level, that would be a key level to watch. For these momentum plays, Goldman Sachs, Penn, and CGC, we are looking for strength and momentum here. If Goldman Sachs breaks below level listed, we are looking at it for a bearish play. And then for Penn and then CGC, these are on watch for bullish plays. If they break above the levels listed and they move in a momentum-filled way, that is when the opportunity comes into play. The stronger they move and the more consistent they move, the more momentum the stock builds, and the better the short-term opportunity becomes. So keep these three stocks on watch for tomorrow. And besides that, let's jump right into today's $975,000 big money trade. On Friday, the big money bought the XLK 235 strike put options that expire on December 20th of 2024. Looking at this trade, XLK is an ETF that follows a bunch of big tech related names. Basically, the 235 strike put options are already in the money. They have a fair amount of time to them. They are a decent sized trade coming in at just under $1 million. XLK is making lower highs, which is a bearish thing to see. And there are some real risks to the stock market in the short term. Again, fears with the election and the wars around the world certainly don't help either. Looking at this trade, I really like the reward to risk with this setup. In the event we do see a real sell-off in the market, this trade can do very well, and it can help offer protection for all of the other bullish trades that are out there. At the same time, a trade like this one will naturally be volatile, as when you have big world events like the election happening very soon, there is naturally big movement in both directions. So basically, if you're looking for some protection in the event of a big tech sell-off, this big money trade might be able to help you out there. So we'll definitely keep this one close on the radar. A $1 million trade into some puts like this is definitely something you don't want to ignore. So definitely keep this on the radar, but we are set for a very exciting week, guys. There's a lot going on in the market right now. We are at the biggest week of the earnings season. We have some huge companies set to report, and there's going to be a lot of opportunity in multiple different ways in the short term. Not only with earnings, but also with, some good dip buy opportunities as we do see some stocks chill out a little bit. That'll open up some nice opportunities for building on some longer term positions. And as we have all these major events going on in the world, you guys already know there is going to be a lot more of the crazy movement that we've already seen. Like I said, last week, Tesla actually had its biggest move in 11 years. Things like this they don't happen all the time. And what comes along with them is big opportunities and a lot of crazy movement. If you guys are into short-term trading, definitely check out the first link in the description in the comments down below to get in on the StockedUp trading floor. Basically, you get access to everything you need for short-term trading, whether it is our army of custom trading robots, our weekly live events, big money trades, and the same day they're made. You could chat with Tom and myself all day long, and many, many other features. If we covered everything, this video would be a couple hours long at the very least. We are doing a coupon code for Halloween, so use coupon code Pumpkin Profit to claim the lowest price possible for the program. This takes the yearly down to $6.97, and like I said, this is the lowest way to get in on the Stocked Up trading floor. So definitely check that out. That'll be the first link in the description and the comments down below. But we also want to give a giant shout out to today's member of the day, Counter 465. You're still very new to the trading floor, but you've been working very hard over these past couple of weeks, and it's definitely showing. So huge shout out to you, Counter. Keep up the great work going forward, and let's end this month on a strong note. Besides that, thank you all so much for watching, and let's crush it in the market this week.